What's up, y'all? This is how you're going to read the book map, which is this thing you're seeing right here if you're a complete beginner or a complete dummy. Let's get right into it. Now, this broken down is a lot simpler than it actually looks. Before we talk about this, there's a couple of very simple elementary things you have to learn, right? Every time you buy an instrument in the stock market, there's a bid and ask price, right? The bid is just saying the price the buyer is willing to pay for an asset. So just think about life in general. You want to buy something at a cheaper price. You want to sell something at a more expensive price, right? Buy low, sell high, all that nonsense, right? And the spread is the difference between what the buyer wants to pay and what the seller wants to sell it for, right? So that's very important to know. It's super, super important. So just keep that in mind, that there's a bid and ask for every single instrument you're trading, every stock, every option, every future, right? And that's what the market's all about. The difference between these two and the bid and ask, super important, right? Quick example, like let's say you're buying an ES future here, right? The ask is 54.99. Let's just use this example right here, right? The bid is 5,001. Right, and the ask is 5,001.5. That means the buyer wants to buy at 5,001 and the seller wants to sell at 5,150, right? 5,150 cents. Again, the bid will always be cheaper than the ask. Why? Because the buyer wants to buy for less and the seller wants to sell for more. It's just common sense. The next thing you have to focus on when you're talking about the book map or any kind of order flow, right, is the order types, right? We have two realistically different order types in the market. There is a market order, a limit order, and then the stop orders, which is basically limit orders, right? Now, let's go ahead and go into stop market order. So I'm not going to talk too much about the stop orders here, but basically, those of y'all that may know, once you're in a position and you want to protect your downside, you put a stop order, right? And stop orders can be stop market orders or stop limit orders, especially for options. We'll talk about what that means here as well very soon. But think of market orders as aggressive, right? Market orders are aggressive. They're filled at the current market price. They're filled instantly and it's constantly changing. So good analogy I like to use is if you're ordering lobster at a restaurant, right? So when you're at a restaurant and you want to buy lobster or oysters, whatever it is, and you look at the menu, there's no price there, it just says market price. So if you want lobster right then and there, you're going to pay what the current market price is. Whatever the market price is for lobster, if you want it right now, you're going to pay. You don't care what it is, right? For limit orders, it's different, right? It's only filled at the price level you selected and it will stay open. That order will stay open until filled or until the market closes. So for an example here, an investor wants to buy Apple at $100, but Apple is sitting at $110, right? So they'll set a limit order to buy Apple at $100. And the order will stay there until Apple hits $100 or the market closes or they cancel their order, right? So limit orders, think of them as passive. Very, very passive, right? So how do we know who's going to be in control, right? Since there's no buy and sell volume, the aggressive and passive participants is how we determine intraday movements, how we try to predict intraday movements, and how we determine who's really in control. And we're going to use Orderflow to determine that, which is Bookmap, which I'm going to be showing y'all how to read that here very, very soon. So remember, right? Aggressive participants are the market orders. When an investor buys with the market order, it'll hit the ask. Important. So when an investor is buying with the market order, they wants to get in right then and now, it will buy from someone who wants to sell right now, which will be the more expensive price, the ask. When an investor wants to sell with the market order, they're being aggressive, they will sell at a cheaper price. They will sell at the bid, hence they're being aggressive. So think about it like this, right? If you're buying at the market order, you'll pay a more expensive price. You're being aggressive. If you're selling at the market order, you will sell for a cheaper price since you're being aggressive. Now, all the passive participants are all the limit orders sitting in the market. They will only trade if price goes where they want. This is usually the smart money. Now, a good rule of thumb to determine the relationship between the two, which we're going to talk about using Bookmap for, right, is the markets will move up if there's more passive buyers and aggressive sellers and vice versa. So if buyers are in control, when I say that, all I'm saying is that there's more aggressive buyers and passive sellers, or there's more passive buyers and aggressive sellers. And when the sellers are in control, you'll hear me say that a lot, is when there's more aggressive selling than passive buying, or there's more passive selling than aggressive buyers, right? Very, very, very simple. Let's just jump right into the book map. So when you're looking at the book map, right, and you want to read this, there's a couple components. This is a simple book map. No indicators, no crazy things. You can put iceberg orders on here, large number orders. You can do a bunch of crazy stuff on book map. But right now, we're going to just keep it simple. And you really only need to keep it simple. I don't use indicators on this. This is all I use. I keep it very, very simple. So first things to take notice of, right, let's zoom in a little bit here. So you have these red and green bubbles. What are these red and green bubbles showing you, right? So exactly what we talked about. The green bubbles are all the market orders that are hitting the ask. These are the aggressive buyers. The red bubbles are all the aggressive orders, the market orders hitting the bid. These are the aggressive sellers, right? And then these orange, dark orange and red lines, so I have it on this scale right here, meaning the darker it goes, the more to the right of the scale it goes, the bigger the order is, right? These are all the passive participants. If these blocks, these rectangles, these lines are underneath the current price point, they're buyers, right? If they're above the current price point, they're sellers, meaning this right here is a passive buyer. This right here was a passive seller. Right here, you see the order book, right? Which is just the number of passive orders. So basically, let's go ahead and go over here. The market's closed, which is why it looks janky like that, right? If there's a big order here, it will show a big number here, right? And the market's closed right now, so we're not gonna be able to see that. But basically, all it's saying is that at this 5,700, there's 37 lots, which is actually multiplied by 100, I think. So 30,700 lots of buyers sitting at this level. And as you can see, it changes and moves up and down. They're just showing you how much the orange little bars here represent. You can just zoom into the bars and see the same number. You can hover over the green circles and see the volume of the people hitting the ask, the volume of the people hitting the bid on the red circles, and vice versa. The cumulative volume delta down here gives you, so you can actually change it up to have it just be per session, what the session actually is. For me, it is on session start setting, so it starts at when the futures market actually opens up. You can change it to whatever you want it to change to. I have a video on all my settings actually on my free Discord that I'll plug down below. Also, a free course about my whole strategy will be plugged down below. But the cumulative volume delta, depending on the session you have selected, gives you the delta of the total session. So meaning in this session, since it's positive, there was 12,895 more aggressive buyers than there were aggressive sellers. And if you take a look at the market, right, you can see we closed very, very green, had a nice bullish rally up into pretty close. What did it go to? These high was the 760s, right? And the cumulative delta is very, very green. So how you're going to read the relationship between these participants is actually very, very simple. What you want to do, right, same thing I said, if there's more aggressive buying than passive selling, the market will move up. So an easy way to read this today, right, was every time that we approached a passive sellers, it got met by aggressive buying that got rewarded, meaning price kept holding higher and higher prices. We filled up passive sellers, held higher prices. Down here, we had a decently sized aggressive seller, but he did not get rewarded, meaning there were a lot of passive buyers to absorb him. The market keeps moving up, right? Right here, we filled passive sellers, market moved up. Right here, we filled passive buyers, right? Right here, we filled passive sellers because it was above price, got met by aggressive buyers, cleared those offers, market moved up. Right here, we tried to fill passive buyers, did not clear all the orders, even though there was decent aggressive sellers, so the market moved up, right? Right here, we didn't see how he tapped this, didn't fill. Finally filled, but there was more coming up in the way, so the market started to move down. This is signifies a little reversal. Now we start filling all these passive buyers and moving down. So this is the relationship between the market, right? All it's telling us is that there's more passive buyers than aggressive sellers. The market will move up, and vice versa. So let's go ahead and open something up like SPY. All right, right here, what do we see? Huge amounts of, you got it, passive buyers. That passive buyer right here got met by a huge passive seller. And what does price do? It moves down. What does that mean? Sellers are in control. This is how you read the relationship between passive and aggressive participants. This is how you can determine who's in control at any given moment. Very simple. This is the beginner basics, and if you understood this, you understood most of Bookmap. Now you have to be able to use this in your own strategy and implement this into your own system. And if you want to find out how my system works, again, I'll put it down below in the description. I'll see you all in the next video.